I said I wanted to talk about Robinhood, but I also just looked on the screen behind you and I saw the price of Bitcoin. And I know every time we've spoken, you've had a take on Bitcoin. Do you have a new take? Still holding?
I think now the barbarous relics, and I would lump gold and Bitcoin together. I think they probably take on a larger percentage of your portfolio than historically they would, because we're going to go through both a challenging political time here in the United States, and we're going to go through, we've obviously got a geopolitical situation. So I would say...
But high interest rates were supposed to be the thing that was actually going to be unhelpful to Bitcoin.
Well, and I think on a relative basis, look what's happened to gold. It actually has been. Clearly, it suppressed it. So you know that more likely than not, we're going to go into recession. There's some pretty clear-cut recession trades. The easiest are the yield curve gets really steep. Term premium goes into the back ends of debt markets, right? Into 30-year and 10-year and 7-year paper. The stock market typically right before recession declines about 12%. That's probably going to happen at some point from some level. And you look at the big shorts in gold, more likely than not in a recession, the market's typically really long assets like Bitcoin and gold.
And that was Paul Tudor Jones giving his thoughts on Bitcoin and gold during a recession, if you should be buying them. And welcome back to the channel. Aaron from the Bitcoin Bros coming back at you with another video today. If you're new to the channel, please consider subscribing. We have new videos coming out every single day. And in today's clip, we'll be checking out Peter Schiff. He's responding to what Paul Tudor Jones just talked about in that clip. He talks about what he thinks is going to happen with the U.S. economy over the next couple of years. And he also gives some brief thoughts on how it will affect Bitcoin. You guys know how Peter Schiff thinks about Bitcoin. The Bitcoin Bros obviously do not agree with him, but I want you guys to check this out. Leave all your thoughts in the comment section below. Let me know what you guys think, and let's go ahead and play the clip.
What he said that this is the worst shape we've been in since World War II, meaning he believes that we were in worse shape during World War II than we are now, and he's wrong. We're in way worse shape now than we were at the end of World War II, because even though we had run up a bunch of debt to fight that war, we had the capacity to pay it back. We had a very productive workforce. We were the world's wealthiest creditor nation. We had trade surpluses. We had a lot of national wealth that could be tapped into and was tapped into because during the war, taxes were raised significantly. Remember, before World War II started, nobody paid income taxes really except the very rich. There wasn't a withholding tax where people's money came directly out of their paychecks. And there were a lot of other taxes that were added in 1943 as part of the victory tax to fund the war. Now, when the war ended, none of those taxes went away. And so the government had all this tax revenue after the hostilities stopped, and we demobilized 20 million soldiers. The government had all this revenue coming in from wartime taxes that were never repealed. And so we were able to pay back all of the debt that we incurred to finance the Second World War. That is not the situation that we're in today. We have no capacity to pay this debt. We have no extra tax revenue now. We didn't raise taxes really on anybody to fight the COVID war or the war on terror or any of these wars. We ran deficits. And now we have this huge interest expense that's rising rapidly, closing it on $1 trillion a year, and then it's going to keep going on the debt we already have. And, people don't have the capacity really to pay higher taxes the way they did, in the Second World War, because taxes were very low before the war started. And even after the war, they were still on average lower than they are now. The problem is massive spending. We didn't have this bloated Social Security program. Social Security was very new in 1945. It didn't even start until the 30s. There were very few people collecting it in 1945. You had lots of people paying the tax, but very few people getting the benefits. You didn't have Medicaid. Medicare started, but again, it was a tiny expense compared to what we have now. And of course, we have Obamacare in addition to Medicare and Medicaid. Medicaid didn't even come in until the 1960s. So the government is in a far, far weaker position. It's not even close. So Tudor Jones, he is so sugarcoating the degree of the problem. And, the fact that he's one of the only guys out there, that was an interview on CNBC. He's one of the only people that comes on there that even says we have a problem. But even he isn't doing it the justice that it deserves, because the problem is so much worse than what he acknowledges. Yeah, and we'll be a much stronger nation after we're finished with the default than we are now. We'll be in much better shape fiscally, right? If there's a company that's bankrupt and they restructure and they get rid of a lot of debt, at the under end of the process, they're in much better shape. So we're going to be in better shape after we do this. It's not just our creditors that we need to default on. We need to tell people on Social Security, on Medicare, a lot of people are not going to get that money. It's not going to happen. What is going to happen is everybody is going to get paid what they're owed, except it's not going to buy very much. So the bondholders are going to get their money, but when they go to buy stuff with it, they're not going to be able to get much, right? So my way is honest, and our creditors end up with more purchasing power, my way. The way the government's going to do it, the dishonest way, creditors will lose even more. They're going to get their money back, but their money is not going to have any value when they get it, or very little value. Right. So they're not going to cut your Social Security benefits. They're going to give you all the money. It's just that you're going to use it all up, with one bag of groceries, right? Because it's not going to go very far, is because the conventional wisdom is so flawed when it comes to the outlook for inflation. Most people believe that 2% inflation is around the corner, that, maybe another quarter point hike, maybe a half a point, another year. And, we're just going to be back at 2%. And then the Fed is just going to be able to cut rates, and everything is going to go back to the way it was in the last decade or two. And this is wrong. This is just not going to happen. I heard this, this fool on CNBC this morning, saying that, look, the Fed doesn't have anything to do with inflation. He said, look, for years and years, the Fed was trying to get inflation to go up to 2%, and all of its policies had no effect. They were doing QE, they were doing 0% interest rates, and it had no effect on inflation. I mean, of course it did. That's why inflation is so high right now. It's because of what the Fed did to raise the inflation rate to 2% that it ultimately went so much higher than 2%. And it's why it's never going back down to 2% in the foreseeable future. It did have an effect. We're dealing with the effect now. It's just that there was a lag, right? It took a lot longer, and part of it was hidden by a CPI that understates by design the degree to which prices were going up. So all the years that the Fed claimed that prices were going up less than 2%, they actually were going up more. It's just that the government numbers didn't reflect that. But getting back to so the markets don't get this. So they don't realize that they need an inflation hedge, because they don't think there's any inflation to hedge. They trust the Fed. They think the Fed is going to take care of the problem. The Fed is not going to take care of the problem. The Fed created the problem, and it's going to make the problem worse. And so they should be buying gold, and eventually they will be buying gold. Now, whether some people buy Bitcoin instead of gold or in addition to gold, who knows, right? Some people might decide to do that, and that might push the price of Bitcoin up. I don't know. But even if it goes up, it won't stay up. Eventually, it's going to collapse. So whether it has another rally before that collapse is anybody's guess.
And thank you for watching all the way to the end of the clip. If you haven't already, make sure to hit that like button if you found any value. Subscribe for more videos. Let me know what you guys thought about what Peter Schiff had to say in today's video. Put that in the comment section below. My name is Aaron from the Bitcoin Bros. I'm out. I'll see you guys in the next one. Have a great rest of your day.